Hey there, welcome back. This is Dan Frio, the Mortgage Update. And today I'm going to go over how to pay off your house in 5 years. Or is it possible? So I keep seeing, every time I go to YouTube videos, I keep seeing all this stuff. How to pay off a mortgage in 5 or 7 years, 5 or 7 years, 5 or 7 years, 5 or 7 years. They're getting huge hits, but when you watch the videos, it really makes no sense. And basically, it's just basic math, okay? I'm a mortgage broker in Chicagoland area. I have been for over 30 years, and I don't even have a mortgage paid off in 5 years or 10 years. So basically, I wanted to do a breakdown to see, how the numbers add up. So I just put together a new page on my website, and I just want to go over this with you real quick, just to show you the numbers and just to show you how, um, the numbers add up, and is it possible? Yeah, it's possible. Is it realistic? I don't think so. So again, I hope you like the video. Please don't forget to subscribe. If you would, give me a thumbs up if you like the video. Give me a thumbs down if you don't, or put in the comments before you give me a thumbs down. Put in the comments what you think. What I might be able to go into more detail on. But this one, I just wanted to make this a simple video of the math. And you could figure out, and I put a mortgage calculator in here, you can figure out, what can you afford, and what terms that would put you into, how quickly you can pay off your loans. But I would highly suggest also that you have a reserve fund. You don't use every penny that you make to apply toward your mortgage. And because you make a mortgage payment, you can't get that money back. I mean, I guess you could if you refinanced, but most people, if the goal is to pay off the house as quick as you can, that's what we're looking to do. So again, here's I keep seeing these videos, 5 to 7 years. How they're doing that, I don't know. Here's the page that I just created, and my website is the mortgageupdate.net. You can find that there. Under purchase, or I'm sorry, refinance, I just created this blog, how to pay off your house in 5 years. So I go through this, and basically what I tried to do is break this down into saying, here's what they're telling you to do. Okay. They're advising you to get a 15-year mortgage. Okay. Apply extra payments every month. Okay. And the next thing you know, bam, your house is paid off. Okay, great. Is that realistic? No. And let's go through some of the numbers. Okay, so I'm taking a typical family that makes, let's say you make $60,000. Okay, that breaks down to you make $5,000 a month. All right, that's your income before taxes, federal, state, local. Okay, so keep that in mind. The other parts of this equation, though, is, I'm putting in there you have $400 a month in other debt. You might have a car payment, a car lease, credit cards, student loans, something out there, medical bills, something out there that equates to $400 a month. I just threw that number out there. Just amuse me for right now. Real estate taxes, like I said, I'm in the Chicagoland area. They're fairly high. I'm using a $4,000 tax base. That's probably good in a starter home. So that's where we're at there. $1,200 a year in homeowners insurance in case your house burns down. I'm also assuming you don't have any PMI, so you're putting down 20%, a 20% down payment. Okay. The next thing here is what we call a debt ratio. So with conventional financing, or if you're getting a conventional mortgage, and I won't go through the conventional FHA, VA, and all that stuff, but like I said, I'm trying to make this as simple and basic as I can. They usually want you to, or the lenders, they're looking at a debt ratio of 47%. Now, what is debt ratio? Basically, you're taking your monthly expenses, so the expenses on your credit report and your mortgage payment, okay, divided by your monthly gross income. All right, so we're looking at a factor of 47%. So when I break this down, the maximum payment that you could afford on a mortgage in this situation is $1,936. Okay, total, your mortgage. That includes your taxes and homeowners insurance. I'm going to use a factor of 5% on your interest rate. And again, we're assuming a 20% down payment. Okay, so when you factor all that in, If you qualify for a 30-year term, you can actually qualify for a $280,000 mortgage. If you're qualifying for a 15-year term, that amount goes down to $190,000. So in a lot of sections of the country, $190,000 might put you into an awesome home. Here in Chicago, that's a starter home. Nothing against that, okay? But then again, it's a 15-year term. All right. So now let's do this. How much would you have to pay on that payment to pay it off in a shorter term? So that's where these numbers come into play. All right. So to pay this off early, you would have to pay or send in an extra $2,100 a month. Now this is for the $190,000 loan at a 5% interest rate with these numbers that I put up here, and those I think are very realistic. And this would pay off your house in 5 years. Okay, so, but let's break down the math. If you're making $60,000, so that means you're making $5,000 a month. You're not even going to net $4,000 a month in income. Also, you have $400 a month in other bills. You don't bring in enough money to even make this possible. The only way that this might be possible, and this even 5 years isn't realistic in this situation, would be, let's say we pay off that, I'm a mortgage consultant, I'm a mortgage broker, where I try to help people when we restructure their debt is, let's say, and I made an example down here. Let's say a person has $20,000 in credit cards and the minimum payment a month is $1,000. That's going to take you years and years and years and years to pay off. However, we pay off that $20,000 in a loan that is going to cost you an extra $592 a month in your payment. Okay. However, you're paying $1,000. So basically, it increases your mortgage payment by $592 a month. You have $408 left over that you can apply toward your mortgage payment. So this is a way you can apply an extra $400 a month toward your mortgage payment. In this scenario above that we just did, you have to send in $2,100. I don't think it's very realistic. So if it is realistic for you, your situation, God bless you. But let's go into this mortgage calculator real quick so I can kind of show you how this works and how you can kind of manipulate through the system. So all you got to do is click it. You go in here and you put in, let's put in this case, 190,000. That didn't work. Bear with me a second. Let's click Open With, go to Google Sheets, click that, and it'll open up into Google Sheets. So hopefully you have that. So we're going to go into this, and now we're going to kind of manipulate with some numbers. So we're going to go 190,000 at a 5% interest rate, or whatever your interest rate is. And let's go, you want to pay off your house in, well, let's go to my numbers that I had, 15 years. This gives you what your payments would be. Okay. So again, this doesn't include taxes and homeowners insurance. So where you can use this calculator, where I find it very handy, is let's say you can't afford the extra $2,100, but what's that extra $400 going to do for you that we just saved you on the last page? It's going to take you from having a 15-year term to now a 10-year term. So you just saved $24,000 in interest. That's basically my whole point of this video. It's, can you pay off your house in 5 years? Maybe. I don't think it's realistic. But this is a tool that you can help budget yourself with to say, you know what, we are steadfast. We want to pay off our mortgage in this amount of time frame. This is the tool for you to use. So again, you can go back to my website, and go back to this blog. It is an amortization calculator. Click it. It'll open. If it doesn't work for you in that, once you click that, just click in Open With, or open that calculator in a different format. It'll open up for you where you can use that. So again, you open that up, Open With right here, click it, and you can open it with any kind of forms that you have. You might have Excel in your system. If you don't, you might have Google Sheets. If you don't, open a Gmail account and you will have it. So that's basically what I wanted to explain in this video. Hope I hit some good points there. But when you see some of these things, don't set unrealistic goals, because you're just setting yourself up for failure there. Put in a budget which you can afford, and then you know what? If you get rid of 2 or 3 credit cards, and now you have that set up for your budget, and you can start sending in an extra 100, 200, 300, 1,000. You get a raise. Instead of blowing it, start trying to save. Put this money toward this. So basically, like I said, I just wanted to do a video that went over, all these videos that I see that, pay off your house in 5 years or 7 years. It depends on also where you live and how much money you make. Those are the 2 biggest factors. And if you can do it, God bless you. So I hope you found this informative. If you would, please give me a thumbs up. Don't forget to subscribe. You can reach me at dan.frio, which is FRIO, @gmail.com. Check me out on the web at themortgageupdate.net. And if you want to talk to me, like I said, I'm in the Chicagoland area. You can reach me at 630-338-1160. Thank you so much. Have a great day. God bless.